notably we expect the Fed to cut rate by 25 basis points. And as you said, the labour market report, despite the fact that we have evidence of a slowdown of the labour market conditions, they still remain pretty strong. So we still continue to see some job creation. And actually, if you look at the level, which is 143K, it is actually slightly above the level that is consistent with the economy growing at potential. So for the time being, rather than seeing a hard landing, it's more of a soft landing that we have in mind, and therefore a 25 basis points rate cut by the Fed.
Which is a problem, because some market participants are saying it's 50, some are saying 25 like you, and this means that the market is not in lockstep heading into the Fed decision. Yep. If it is 50 basis points, do you think that does have the potential to spook the markets, for some saying, well, look, what are they saying that we're not seeing?
Exactly, and again, for 50 basis points to happen, it would mean that we have a strong iteration of the demand condition, which we don't see for the time being. So besides the labour market report, which has shows some sign of slowdown but remain overall pretty resilient, we also had some indicators such as the ISM services. We continue to point to resilient consumer spending, and the same is true with Q2 GDP, which has been revised up, notably on the back of private consumption. And just keep in mind the figure that we have for the month of July, personal income and spending. And just looking at personal spending, assuming no growth in August and September, that would mean an increase, a still significant increase of private consumption. So, and if we would see, let's say, a 50 basis point rate cut, it would signal also that the Fed might be behind the curve. But for the time being, the data do not suggest, in our view, a rush to a 50 basis points.
Let me try and be provocative to our viewers, and especially who cares what the market's been wrong for so long. Being wrong a little bit longer doesn't matter. We're supposed to have had 100-odd basis points of cuts so far if the market was right, what it was telling us 12 months ago as well. So to a certain extent, the market's been so badly wrong. And the fact is, the Fed has so far negotiated brilliantly. Whether it's by luck or judgment, it's negotiated brilliantly. Who'd have thought we could be where we're at now without a rate cut?
Yeah, which quarter were we cutting in? If you look at the initial...
Every quarter, wasn't
exactly.
It? But going back to what the Fed members... And I have this theory, just because I've been watching this for, nearly 40 years, and that actually the Fed members can do the work of the actual Monetary Policy Committee by talking aggressively about the next cuts. And that's what I think we got from Williams. That's what we're getting from all of these members as well. Waller and Williams saying, look, we're really, really happy with how things are, but we can go aggressively if we want at a later date as well. That can do the work of the actual committee itself and have the same effect on the curve.
Yes, indeed. But at the same time, when we look at the economy where we are, and this is what the point that you mentioned, the market was pretty wrong. I mean, if you look at the expectation of the market last year, so it was much higher. But the economy has been more resilient than expected, and notably due to the fact that we had, let's say, a lagged impact on the different sectors, and the fact also that we don't have any business cycle amplifier at the current stage, which has led the economy to be so resilient.